Welcome to the Bound to be Rich podcast, where I attempt to reverse engineer people who seem to be successful no matter the circumstances, so that you can apply those lessons to your own life. I'm your host, Ismail. In this episode, we are joined by Mike Anderson. Mike is a friend of mine from the event space, but he's building a name for himself as a prominent real estate investor in my area. I'm really excited to share this one because I know many of you will find it more relatable than my other episodes. You don't need to trade stocks or start an online business to be successful. If you're more comfortable with something like real estate, you can absolutely just stick to that. So while having a regular job, Mike has somehow acquired 13 rental units in the last year and is quickly building a valuable real estate portfolio. We talk in detail about how exactly he did it and how you can too. We also cover a bunch of other topics like investing and productivity. Let's dive in. Mike, thanks so much for coming on the show, man. I appreciate you coming on.
Yeah, man, absolutely. Thanks for having me.
I'm excited for this conversation. We've actually known each other, I'm really bad with timing, but it's years. I think we met in person first at a conference years ago, and we've been interacting online for a long time. So we have some history, but I think this conversation spurred from a Facebook thread or something like that, where I made a comment as a joke that real estate can't compare to crypto investments because you can't get like 500% returns a year with like you do with crypto. Of course, this is being recorded the day after crypto crashed, so that's that. But you made a comment that, hey, you have very high returns in real estate because you don't leave your money in the transaction. So that kind of started us talking about real estate. I have a background in real estate. You're doing stuff there. So I just wanted to set that up for everyone listening. But if you don't mind, just sharing a little bit about yourself. Who's Mike Anderson?
Yeah, absolutely. Just to touch on that that Facebook thread, me and you, in the online community that we're in, I always had a strong presence there, as did you. So, I'm sure we saw our names pop up on Facebook over the years, and I had commented on that thread, and we'll get into that a little bit later. But it's definitely comparing apples and oranges. They're two different asset classes, but hopefully we could talk about how I do real estate and how it's a great investment vehicle. It's not always about making hundreds of percents return on your money per year. There's different ways to make some great cash flow and make great investments. But just about me. To stick with the theme of your show, I've always had a little bit of the entrepreneurial itch or the bug. I grew up in traditionally, hey, go to school, get good grades. So I don't think it was really encouraged. I always had a curiosity to me. I like to tell people, like, I was that kid when it would get a foot of snow, I'm like, oh, this is the greatest thing. I get my snow shovel, I get my business partner, it was the kid next door, and we get our shovels and we go knock on doors, and it was $1.50 for me and $1.50 for my business partner, and we shoveled the driveway.
For $3.
Yeah, I thought that was amazing. I remember getting a Ziploc bag of 6 quarters, and I said, this is the coolest thing ever.
$3. I'd pay you $3 happily to shovel my driveway now.
I'd pay any kid
Sounds
$3
like a great deal.
to shovel my driveway. Yeah. So, but that just kind of mindset always stayed with me. Going through high school, I was into music, so I had some recording equipment. I was always trying to kind of hustle the kids in my school, hustle my friends, and recording their music and just trying to make a buck off of it. So I was just always in that mindset. Out of high school, I got a W-2 job. I became a police officer. That's what I still do now. Great profession. I love it. But, as I was doing that, I still kept an interest in just doing things on the side. When I was about 22, 23 years old, so about 10 years ago, I decided I wanted to learn how to DJ. So I had a friend who was a DJ at the time, who was also a coworker. So he kind of showed me the ropes. I kind of got into that, and that kind of snowballed into the photo booth business, where me and you kind of got acquainted with each other. So in 2014, I started my photo booth company. I've been doing that for about 7 years now. So that's been a good learning experience just from the business side of things. Just going in really with no expectations. I think my first year in 2014, I dropped $3,000, which I thought was a ton of money at the time. And I'm like, if I do 7 events, I can make my money back, and that would be great. And I did 40 events that year, from August to December. So, and then it was just kind of rolled from there. I made a lot of mistakes, trying to do everything myself. But, over the years, I've gotten a little bit better at it, learned to leverage other people, learned to leverage other people's skills and time and stuff like that. So I'm still doing that currently. And then about a year and a half to 2 years ago, I started doing the whole real estate thing, which we'll talk about. Do you want me to get into a little bit about my portfolio or where I'm at right now? Or
Yeah, if you don't mind, just first of all, what you just touched on until now, there's a lot of things to get into that were not real estate related, so hopefully we have time to touch on some of that stuff too. Yeah, but if you don't mind sharing, what have you done in real estate in the last year and a half or 2 years? I know you share with me what you've done, so the audience knows that you know what you're talking about, and then I'll pepper you with some questions if you don't mind, because part of the reason, and I told you this before we got on, I wanted to discuss this because if I get people on the show and they talk about trading options or investing in crypto, and then I hang out with my friends and family that I know listen to the show, they don't relate to that. It's unrelatable. They don't understand crypto. They don't understand stocks. They don't understand these sort of things. But real estate seems to be the great equalizer. Everyone understands real estate. Everyone seems to want to do it. They just don't know how to do it. So I feel like the hope of this conversation is that we give people that light bulb moment, that motivation to say, hey, you could do it, and this is exactly how you did it and how other people can maybe go about doing it as well. So that was the goal of the conversation. But yeah, if you don't mind sharing what you've done so far in, would you say, 1.5 or 2 years since doing this?
I closed on my first property in November of 2019. So if you count that as a start dating, it's about 1.5 years. But like you said, with all the HGTV shows and people owning homes of their own, anything that you post or talk about real estate, everyone's always into it. They can relate to it, they can talk about it. They like to watch the realtor shows on TV, the fixer-upper shows on TV. So it's an easy topic to kind of grab people's attention on. Let me go back a little bit. As I progressed, through my 20s, with my side business and everything, I started just seeking a little bit of financial education. I jumped on the Dave Ramsey bandwagon, who's a no-debt guy, as you probably know. I followed those steps for a while, and I got a super strong foundation, paid off all student loan debt and everything, got 20% to put down on a house, and, that was a couple of years ago. And then, my goal was always real estate. It was, I'm 33 now, and this was probably 3-4 years ago. My goal was to have my first rental property by the time I was 35, and then to purchase one every 5 years after that. So maybe I'll have 4 or 5 by the time I retire, whatever it is. Just to give you some perspective on that, I own 8 residential rental properties right now, and I'm closing on 5 units tomorrow. So as of tomorrow, I'll have 13.
Nice, congratulations. Hopefully the closing goes well.
I hope I didn't jinx myself there.
It's what you said is impressive, because that's a lot in 1.5 years. People probably that are not familiar with real estate probably think, how can you close that often? I know my friends always ask, hey, if I get a mortgage and buy a property, don't I have to wait a couple of years before I can get another one? So I guess this minutia of details what I hope to get into with you. But it looks like you have about 13 units, rental units as of tomorrow, in 1.5 years, which is impressive. So how do you get these returns?
Right. So there's a lot to dig into there, and like you said, it's if I saw myself 2 years ago and said, hey, I'm going to own 1,300 rental units in 1.5 years, I'd say, you're either doing something illegal, you're doing something crazy. You must have you must have inherited $1 million, right? Is that what goes through most people's head when they hear that? The truth of the matter is, I did save up, not a significant amount of money, a little bit of money just to get started. But I consume so much education, and I just feel the mindset is really where all that leverage and power comes in. Getting into how to reuse the same capital over and over again to purchase multiple properties, how to leverage the bank's money, to the point that you have no money working in a deal because you've used your knowledge to add value to a deal. And I think that's really where the power of investing comes in.
So from my knowledge of you, you're always interested in like educating yourself, learning. And I know this because of if you look back through our thread of Facebook communications, it's always like, oh, you were reading this guy. Hey, look at this guy. I'm telling you about something that I read. So you've got this thirst for that knowledge, right? And you talked about the importance of the mindset. Why do you think you had that when it seemingly seems like most people don't? Like, and you had it from a young age. What gave you that?
I don't know. I've thought about that. I think I've just always had, I've always asked why. I've never just accepted things for how they were. If I was told something certain, well, why is it that way? And I don't know if you can teach it, honestly, because when I have these conversations with people who are not so like-minded, maybe coworkers, maybe friends, it's hard to spark that fire in them. They want the one-line answer to success when that's really not there. Oh, how did you buy 13 rental properties? Oh, if you really want to know, I'll get into it. Oh, never mind. It's not just like a one line, I can do it tomorrow. Oh, never mind. How did you make so much money on Bitcoin? Oh, it took you years. You kind of had to do your research and buy and wait. And, people are looking for the quick answer. And I don't know if you could teach mindset other than just telling people it's all mindset. I don't know. I'm a big mindset guy. I'm just, once your mind's there, you'll exceed your own expectations.
Why'd you want to be a cop?
You know what? That's a good question. I started early, so I was into it from a young age, and like I touched on earlier, I was always encouraged to get good grades in school, get a good stable job. So my parents definitely encouraged me. I was also interested in it. My parents always felt like I was a very kind of black and white person. So they're like, you'll be really good at enforcing laws. You go and do that. So I'm like, yeah, this is cool. It's a fun job. It's, you also have a lot of, you do answer to people. Obviously, you follow strict orders, but you're not in an office where you're being given assignments all day, right? You have the freedom to go out there and kind of be your own, I don't want to say boss, but you can self-initiate things as a police officer. You can go out there and interact with people, and there's a level of freedom there where you're just not stuck behind the desk, and I just felt like that was the most suited thing for me at the time. So the reason I asked about the job is because one thing I learned, I had a corporate job behind the desk, and even though I was doing very well for my age in that career, it wasn't satisfying. So I think knowing that about yourself early on, that you didn't want to be behind the desk, is important. Some people don't know that until much later, and they're stuck there. So what I learned after I left my job and I didn't have the W-2 income is that it was much more difficult to qualify for financing, purchasing properties. There's still ways to do it. I'm still able to do it. There's some people that do more shady things to be able to do it. But I think people may not realize that the W-2 income is so important for borrowing money for anything, not just real estate, even for like credit card limits, for whatever you want to do. That W-2 income is viewed as sacred, and I don't understand why, as an entrepreneur, if you have a history of proven performance, like I'm paying people salaries, they're getting W-2s from me, right. Yeah.
And you weigh that more than you do my own income. So it's a little bit of an odd thing, but talk to us a little bit about how important that W-2 income is and why that may want to make you stay in your job a little longer, even though maybe financially you're able to quit now.
So the reason you get favorable financing which is what you're referring to. When you have W-2 income, it's just a product of the financial system and government-backed loans, right? Government-backed securities. They're able to offer those rates that are backed by the government as long as you meet these criteria, which one happens to be a W-2 income. I can't fully back you on the thought that W-2 income gives you an advantage. Let me give you an example. Because, so my property manager, right? He's in real estate full time, right? While 3.5-4% interest rates might be my advantage when buying a property, his advantage is he's in that real estate, basically 24/7. So he's getting the advantage of finding those deals and making basically finding better deals than I'm finding because he's able to just spend so much time in there. So I do feel like it is a advantage to have a W-2 income, but I think there's other people without W-2 income that have other great advantages that could work for them that maybe the typical 9-to-5er might not. Maybe you're good at building relationships. Maybe you're good at finding partners that can get you good financing. So I don't think it's an unfair advantage at all.
I love that answer because, again, and I feel like this might be a common theme in this conversation, is that it's mindset, right? So I talked about how, hey, you have an advantage with your W-2 income, and your response is that everyone has an advantage, right? You have your own unique advantages. You have to work with what you got and stop looking at what you don't have.
And let me pick on you a little bit there because you hear that a lot. Well, I don't have money saved up, so I can't do that. Well, I don't have a W-2 job, so I can't do that. Well, you just told yourself that you couldn't do it, so obviously you're not going to find a way. You just said, well, you have this unfair advantage that I could never get, so of course you can do that. And, it's just not, you're just limiting yourself there.
That's so fascinating because I actually, and I don't know if you relate to this, Mike, I have friends that, for whatever reason, when you have conversations with them about money and success, I've heard this statement a lot where they're basically alluding to the fact that they think money makes, like, to get money, you have to do bad things. To make a lot of money, you have to take advantage of people. You have to become basically a bad person. And my response to that was kind of what you were just alluding to, that you don't have to worry about it, man, because you'll never make money. You will never make money if you think making money is bad, because your mind won't let you think that you're a bad person. So you're already out of the game from the get-go because of the mindset.
That's a great example, just because there's one particular person I have in mind when, and I'll say this, real estate investors have that reputation for being sleazy, people who take advantage of other people, which is really not the case. And I'm explaining this whole BRRRR strategy that we're going to get into in a little bit. But I'm like, oh, you do this, and then, now you're making money. Well, who loses? What do you mean who loses? Why does someone have to lose for me to make money? I'm providing housing. I added value to an asset. I employed contractors. The contractors are putting a heck of a lot more money in their pockets than I'm putting in my pocket at the moment. Maybe long term I'll be okay. So my tenants are happy they have somewhere to live. My contractors are making money. The taxes are getting paid on the building, so the town's happy. My property manager's happy because he can collect some money and he can employ his employees.
The bank's making their interest.
Yeah. So it's, who's losing in this situation?
Again, it goes back to the mindset. Like that person thinks that someone has to lose for you to win.
Right.
Like life is a zero-sum game. And we'll get into this too. I just want to make a note so I don't forget that inflation, in an inflationary system, it's not a zero-sum game because the pie's getting bigger and bigger and bigger. But I'd like to get your thoughts later about inflation in comparison to real estate. For now, you talked about the BRRRR method. So for people who are not familiar with that, they understand the basics. Hey, I can buy a house and flip it. I can buy a house and rent it. That's the level of their knowledge or experience. What is this magic BRRRR method that I've heard so much about?
Yeah, it's kind of a buzzword over the last couple of years. That's primarily thanks to an online podcast / blog site called Bigger Pockets, who I'll give a little bit of a plug there. They've been a huge resource to me, free education, basically an unlimited amount. So, my strategy is primarily buy and hold, right? You buy the house, you buy the property, you put a tenant in there. Hopefully it covers the mortgage, and then a few extra bucks every month gets set aside for, say, repairs. Then a few bucks goes to your property manager, and then above that, hopefully you have a few bucks to put in your pocket at the end of the day. So with the your traditional way that you would think of purchasing a property, because this is how any average home buyer would buy a property, you either save up 10 to 20%. Let's say a $100,000 house. So we're going to save up $20,000. We're going to go put that $20,000 down. We're going to contact the bank. The bank's going to pay for the other $80,000. So now we're living in this $100,000 house with an $80,000 mortgage. So that's your conventional method. With the BRRRR method, you're not doing much different than that. You're just switching up your order of operations. You're still doing all those things. So to keep with my $100,000 house example, right? So with the BRRRR strategy, you want to look for a distressed property, kind of like you're flipping a house. All right. So let's say we're in a neighborhood, the houses are going for 100,000, but here's this one, it's 50. It needs a ton of work. Okay. But once it's fixed, it's going to be worth 100,000, like all the other houses on the block. So we go purchase that house for cash or some source of short-term financing. So you don't have to actually have $50,000, right? You can partner up with a private lender, a hard money lender, or, however you can finance that. So you'll...
And just to interrupt there, sorry, why does it have to be that kind of financing and not a mortgage?
It can be a mortgage, right? But a lot of the time, it's a little more inefficient. A lot of times those deals you kind of have to move a little quicker on. A lot of time there's other cash offers on the table. They might not entertain something with a conventional mortgage. A conventional lender may not lend on a distressed property, depending on what type of work is needed, but totally an option to get a conventional as well. It's just not the traditional way that it's done. It's just a little less efficient, just for those reasons. But yeah, you could use conventional financing as well. It just doesn't always work out as well. So we'll acquire that asset for $50,000, however we pay for it. Usually some form of cash. It's going to need $25,000 worth of work to get it up to that $100,000 value. So we get that $25,000 of work done. We have $75,000 invested in that deal. Now it's a new shiny place. We put a new water heater in. We put some paint. We did some kitchen cabinets. Now it's worth $100,000. So we put a tenant in there. Say we rent it for $1,200 a month. After our tenant is placed in there, we go to the bank and say, hey, I have this house that's worth $100,000. Will you finance this? They say, okay. So the bank goes out, checks it out, and they send their appraiser out. And they say, yeah, this house is worth $100,000. The bank says, okay, we'll give you 75% what's called loan to value. So they're going to give you a loan on 75% of what that house is worth. Mind you, I have $75,000 in the deal, and conveniently, they're going to give me a loan for $75,000. So we go close on that loan. I get a mortgage, let's say $600 a month on something like that with taxes and everything. So now I get my $75,000 back at the closing table. I have a mortgage for $600 a month, but that asset is now rented for $1,200 a month. So going back to your rate of return, theoretically, you're making an infinite rate of return because you have zero money invested in the deal. Hope I explained that okay. And let me just...
No, that was great.
Let me just... so when I say BRRRR, because people are probably wondering what that is, so I just explained the steps of that. So it's a buy is the B, first B. So you're acquiring it. Oh, geez, I'm going to mess up the R's. Rehab. So you fix it up. Then you rent it. Third R is refinance. And then the fifth R is repeat. So the repeat, right now I have my $75,000 back. All right, I'm going to go find the next $50,000 house on the block that's going to be worth $100 with $25 worth of work.
And the reason this is so appealing now is because of what you just explained with the returns. That's the reason why it's better than other options of just buying and holding or buying and flipping. It's primarily because you get your cash out and you have a free property, basically.
Yeah. term used that you hear used is the velocity of money. Don't quote me on that, but it just allows you to reuse the same capital over and over again to acquire assets at a more rapid pace, rather than, hey, I put my $20,000 down on this deal, now I have to save up for another 3 years until I can afford the next one.
And that $75,000 that you pull out, right? Because you financed that first purchase with whatever financing method you decided, so that has to be paid back. So once you get that mortgage from the bank, you're paying off that money that you borrowed. So you're not leaving with 75 grand in your pocket, right? You're basically breaking even, but now you own a cash flowing asset.
Yeah. So let's
right.
Good.
No, go ahead.
Right. So let's say, hey, I got no money, right? I have $0 to money. How can I own a rental property? Okay. I could partner with either someone privately, a hard money lender who allows you to put maybe 10% down, and they'll fund the rest of it. They'll fund the rehab and everything. So like you're saying, even if you don't have the initial capital to make that deal happen, at that closing table, that $75,000 you have into the deal goes and pays back your lenders or whoever you partnered with on the deal. So now you own that asset with none of your own money being used in the deal.
Okay, so now you sold that property, you own the asset, but you still don't have money. How do you repeat it? Do you leverage that property? You can't, because you already did to pay off the existing liabilities, right? So how does that help you get the next one? Or it doesn't really. That's more of like you put that aside to build your long-term wealth, and you just got to do it again from scratch.
That first asset is already leveraged. So you're not able to leverage that anymore unless it continues to appreciate. So when you repeat it, you would hopefully go back to that same lender and say, hey, this worked out one time. Do you want to do it again? You know, whether it's a combination of, you know, your lender's making money. So, you know, they're more likely to give you that financing again. Or at some point, you know, you start to accumulate some of your own cash. And you know, you just take it from there.
Why is it important to rent the property before you go back to the bank to get a financing?
It's not critical.
If it's an investment property, do they look at that income as a way to gauge the value of the property, or that doesn't really affect it?
It's not. So a residential property is not valued like commercial property. So commercial property is valued based on how profitable it is. A residential property is valued like a homeowner would pay for it. So it's valued off of, you know, what someone living there would be willing to pay for it. So to answer your question, sometimes the lenders would have guidelines to say, yeah, it has to be rented before we'll give you a loan. Or sometimes they'll just say, okay, the market rent is this. And they'll allow the loan based off of that. Usually vacancy is not an issue. So if you switch those two R's, it's really not crucial, because you're going to want to get that renter in there right away as soon as it's fixed up regardless.
And so you're classifying these as investment properties. And that, I believe, correct me if I'm wrong, the bank gives you a lower LTV because it's an investment property, not a primary residence. So that matters there. Okay, so can you give us like we talked about imaginary numbers, can you give a recent example of one that you actually did, what the numbers actually look like?
Yeah, sure. I can give you one I'm working on right now, actually, and just by coincidence, I think the numbers are pretty similar to what I just said, but I'll put it in a real-life example for you. Just because,
cool.
So let me think of it. Yeah, let's just do this one. All right, so I bought a property back in October, and I paid $50,000 for it, coincidentally. It was rented at the time. It was technically an off-market listing. It was one of those Zillow for sale by owners, so I consider that an off-market because it's not on the multiple listing system, so it's not going to all the agents' inboxes. So I saw it pop up, and I knew it was a deal, so I gave the guy a call that night. It was a Friday night. Saturday morning, we went out there and saw it. About an hour and a half drive from where I'm living, but that's where I invest, so that's what we got to do. Offered him full price, so $50,000. There was tenants in there for $1,000 a month. Decent tenants. The unit itself, a little older, but by no means in terrible shape. The mechanicals were pretty good. The electric and the plumbing had been somewhat recently updated. And these are 120-year-old houses that I'm talking about here. Just in the area that I'm in, the houses are old. So when you see electrical that's less than 80 years old, that's a great thing.
This is blowing me away so far. I'm sorry to interrupt,
no
but the homes that I'm looking at, that I've looked at, there's no $50,000 homes, and especially ones that are already making $1,000 plus a month, right? Why would that guy want to sell the property for that low?
I did a little digging there. His reason for selling was he was tied up on 2 flips and needed the capital. But let me just talk to you about the power of real estate, because he bought that in 2018 for $25,000. So is he really that disappointed with a quick sale for $50,000? You know, he might have put a few thousand into it. You know, I know he did a few things just to get it up to code. But for him to make that quick sale, he's still making out on the deal. I think he could have got a little more, but I think he sold it for a good price to sell price. For that area.
Okay. Because I think that's the main thing people wonder. Like, that guy is an investor. He's looking to flip other properties. He knows what the property could be worth. He knows that there's already tenants in there. Why would they let it go for such a great deal? But as you find, and I don't know if you agree with this, is that there's so many different motivations. I'll talk about a recent example that I did. It happens. These are human beings. They have problems in life, or they have things that they're trying to accomplish, and they need to do it quickly, and they're willing to do it for cheaper. So it happens.
Yeah, that was just kind of his mindset. Like, I need a quick sale. I don't want to do anything. He, just from talking to me, he knew that I was an experienced investor in the area. So I handled a lot of the township side, paperwork and everything for him. So, it was a example of a win-win scenario. He was happy that he got the cash. Had he put on the market, he could have got a little more. But, in this area in South Jersey, we're talking, this is a very small 2-bedroom unit, that was a little bit dated, with renters in there. Not the most desirable turnkey sale, to be honest with you.
But if it was one tenant paying $1,000 a month?
Yep.
So that's $12,000 a year. So you got it for 4-year and change payback period, which
right.
is
Yeah.
really, really good.
You're it prints money like an ATM machine. Units like that. Yeah, that's what I like. That's what I like to call them.
Even if you didn't do
Right.
anything, that was an ATM machine.
Yeah.
So, all right, you got it for $50. It's making $12,000 a year. What do you do next? Did you remove the tenants to fix it and find higher price tenants, or flip it, or what's the process that you went through?
Typically, the strategy wouldn't be to push any tenants out unless they're really causing an issue, especially in the climate we're in right now, with the eviction moratorium across the nation. But they were actually solid tenants. They paid their rent right on time, and they didn't give us much trouble. So I was just as happy if they stayed. But they decided to leave when their lease was up. That was just the beginning of May, which happened to be perfect timing, just because I was looking to refinance it. So this is where the BRRRR comes in, right? So I can't really BRRRR it until I get those tenants out. So this one was kind of like almost a little more buy it and wait, and then I'll improve the value once they move out. So they move out in May, which is perfect timing for me. It couldn't have happened at a better time. So we go in there. It needs about $15,000 worth of work. That's just all cosmetic, new flooring, new bathroom, kitchen countertops, and a couple appliances. And then we had done the roof and some other small ticket items when we purchased the property back in October. So I have about $20,000 into it. That's still ongoing right now. And with appreciation, with how the real estate market's been, rents have been going up, and I think everyone across the nation knows that there's just been a really big spike in real estate. So I've benefited from a little bit of that, in addition to what we call forced appreciation, which is when you improve a property to add value to it. So after we put that $20,000 into it, I'm expecting an ARV, which is after repair value. That's the term that us real estate guys use. I'm expecting that ARV to come in around 110, 115. So
you bought it for 50, you put in 20, right?
Yep.
Did I get that right? 70. And then the ARV, you'd get 75% of that. So would you get more than what you put in?
You could.
Out of the deal?
Yes, I'm actually doing the calculator right now. So if it appraises for 115, I can take a loan for 86,000. You do have closing costs, so let's knock off 5,000 for closing costs, being fully transparent here. So, I mean, even if your closing costs are $6,000, you are upping the rent. So we're shooting for a $1,350 rent on that place, and I'm gonna pocket $10,000 on the deal, and we'll be cash flowing a couple hundred a month. You know, I got to see what the numbers work out to, but it's definitely profitable.
Now that cash flow, what do you do with it? Do you pocket it? Do you put it towards principal? Do you put it in a reserve account for repairs and stuff that may break? How do you handle that cash flow?
Okay, yeah, that's a good question. So some people look at their cash flow as any dollar over their mortgage. So on a property like this, I would expect the mortgage to be around $600. The taxes are low. So I'm probably looking at about a $600 mortgage payment after I refinance this place. And say we rent it, let's just go easy. Let's say we rent it for $1,200. So your mortgage is going to cover your principal, your interest, your taxes, and your insurance. Above that, my property manager is going to get his 10%. So he collects the rent, he handles all maintenance requests, he places the tenant. So that comes right out of that cash flow there. I'm gonna deduct this as we're talking about it. So he gets the 120. I'll set aside another 10% for any future repairs, just anticipated repairs. So that'll be 120 a month there. And then I'll put aside another 5% for any, like, mostly vacancy. Like if it goes vacant for a few months, I'm still factoring that into my asset return. And then just other little miscellaneous admin costs that just pop up here and there. So I'll basically just do a blanket 25% extra, and that'll cover your property manager, your repairs, any vacancy, any township like permit costs and stuff like that. So all said and done, in this example, say we rent it for $1,200. I get that little extra $10K bonus from the refi, like you noticed and pointed out, and then we're looking at about a $300 a month cash flow. That's just how I calculate it. Some people calculate it differently, but if you look at asset return, factoring in repairs and management, you're looking at about $300 a month.
I love that we went through that in detail, because I think, like you said, people watch these HGTV things and they do this calculation online and like, oh, look at the mortgage, look at the rent, that's what I make. But I know from working in real estate finance, we were doing large properties, but the rule of thumb that they were doing was that $150 a month per unit, no matter what, was going into a R&R account, a replacement and reserve account. And that was for the things that you alluded to. Hey, you know, we have to replace the microwave, or the refrigerator broke, or the plumbing needs to be repaired. So you're never caught having to go into your own pocket. There's an account set up separately to handle these things that inevitably will happen. I mean, that's just the way it goes. We all live in homes or we rent places. Things go wrong and things break. So that money is set aside. And then you can start to look at what do you actually make, what's left over. And I think that's a more realistic way of looking at it. A lot of people, and we see this in the photo booth world or any business industry, they don't run the numbers correctly. And that's why you start to see people charging rates that don't make sense. And you wonder, how are they still in business? Well, they won't be in business for long because they're not making money. They just don't know it yet. And I think going through this real life examples is very helpful to kind of illustrate that for people.
Yeah, and especially for someone starting out, like you mentioned in the photo booth business, it's hard to, it's easy to kind of get caught up in trying to save money, you know, and thinking that you could do things for cheaper than you can. You know, in real estate, you'll see people that want to manage their own units because that's going to save them that $120 a month. So instead of making $300 a month, now I'm making $420 a month. But what they forgot to factor in was their time. So they're basically buying.
You read my mind. That was
yeah.
yeah, that was going to be the next thing I wanted to go into, because You alluded earlier to property manager, and now you explained that they take 10%. I'd like to hear you riff on why it's worth it, because I also have family friends that own multiple properties, and they're the ones still going out collecting the rent, managing the property, mowing the lawn, shoveling the snow. Like, they're still doing all that for all 3, 4 properties. And to them, it's like, hey, I'm not doing anything else. Why not? I save money, da da da. So I'd love to hear you riff on that, and I will send them a clip of what you're about to say, please.
Jeez. Oh, I'm so ready to answer that question. Yeah. My philosophy is to focus on things that make you money, not things that save you money. So if you want to buy a property and pay more than everyone else in the area is willing to pay for it and do all the work yourself and then rent it out and manage it yourself, not only are you buying a bad investment, you're actually not buying investment. You're just buying a job. Because if you paid $70,000 for that property that I just paid $50,000 for, because you said I'm going to do the work myself and manage it myself to save this money, you're making the same $300 that I'm making, but you're doing all. You're like, if you want to do that, just go work for a property management company and go work for a construction company. At least you get the benefits and the sick days, you know.
I mean, that was a great way to put it, because they're making the same. I mean, I just want to hammer that home. They're making the same return in their example because they're doing all the work, they're saving the money, but they're paying more for the property. But how do you get around the mindset of saving? Like, I agree with you. I'd rather focus on making money, not taking money, but I'm as guilty of that myself. I look at my finances. Where does money go to waste? I hate waste. And I think a lot of people listening relate to that. They're worried about waste, leaks. I got to plug the hole. Why are we spending money here when we don't need this? I don't use this. Is this worth it? How do you get away from that mindset and get more okay with these leaks? Because you know you're going to make up for it with making more money.
I think it's just a matter of valuing your time, and it's so. If I knew a good way to teach that to people, I'd be doing it. But I just do have these conversations with people who just haven't learned the value of their time yet. And everyone values their time to some extent, right? Do you change the oil on your own car? You know, why not?
I don't, but yeah,
right.
People do.
Hey, if you love changing the oil on your car,
yeah.
By all means, go and do it. There's certain things I do around the house that I can pay someone to do, but I just enjoy doing it. You know.
Same.
Do I like cutting my lawn? No. I pay $40 for the guy to come. It would take me 3 hours. It takes my company a half hour, and they do a great job for $40. So everyone values their time to some extent, and you can give the oil change example is an easy one because no one changes their own oil. You know, so that's one way to kind of get people thinking, and just, you know, as I just, you know, I did kind of bust my butt a little hard, you know, on the weekends during my 20s, and had to learn the hard way, just so from experience how to value my time, because after a certain point you don't want to work all week and then go work all weekend. So now just my journey is just looking for a little bit more time freedom, and I don't know how to teach that other than just kind of share my stories a little bit.
I'm gonna harp on this because I'm going through this personally. Even though we're going all over the place, I'll come back to the real estate after this. But you are touching on something that I'm struggling with right now. And you know, I just had my second child, and I feel like I'm dropping like balls left and right more than I ever have in my life. And it's a struggle to get as much done as I used to get because I have so much less time, and I'm getting frustrated with myself. So I'm like, all right, how do I like automate a lot of the work I'm doing? Who do I hire? How do I make processes and give it to people? So I'd like to hear you talk about that a little bit from your mindset, because I know you're trying to automate the photo booth business as much as you can. And even in the real estate that you're talking about, you alluded to a team, right? You have an attorney, you have the contractor, you have someone that manages the property, gets the rent, gets the tenants. So you're already outsourcing work in all these different facets that you're doing, on top of having a job. How do you think about that? How do you advise like someone like me that I'm like, wow, I got to really get my arms around all the stuff that I'm doing? Maybe some things I have to let go, just not do it at all. Maybe some things I have to outsource to people. How do you think about that? How do you advise people to work through that problem.
Yeah, I'll touch on the way I've leveraged other people in real estate in a minute, because I did go into that business with the mindset of leveraging other people's time and skills, people who do stuff better than me. But in the photo booth business, it was just me. I was doing everything, and I had to learn piece by piece that other people can do a better job at the things that I'm doing right now, or just as good of a job, or even if they don't do as good of a job, does it really matter because they're still getting it done, and I'm not doing it. So for me, it was what is taking up the most of my time consistently, that what's keeping me busy but not productive. Sometimes people feel, as long as they feel busy, they feel like they're getting stuff done. But just to give you, like, from the photo booth example, if I'm sitting here for 3 hours designing graphics for my jobs this weekend, I'm not getting anything done. I'm just playing defense. I can't build any systems in my business to make things easier for me in the future. So I started going through things one by one, and it was just really hard to let go of at first. I said, how am I ever going to find a graphic designer to do what I do? And then I realized I just literally made one Facebook post, and someone messaged me like, oh, I can do that. And they already knew all my software. They knew all the systems that I use because they have their own photo booth company. So she's like, yeah, I want to make a few extra bucks, in my free time, and I'm happy to do it. And just like that, that burden was lifted off of me, and it just frees up my time to either enjoy it or, go jump into your next endeavor or improve your business and build your business.
And they probably are a better designer than you are. But how did you get around having to pay them whatever the number is, $20, $40 per design?
I didn't even question it when she told me the rate. I'm like, just do a good job. And you know what? One of the things I learned is you don't have anything without your team, so pay them well. I gave all of my employees an $8 an hour raise at the beginning of the year this year. I'm like, look, the events are coming back. This is,
Wow.
I'm going to expect more from you guys, but this is what I need. I want to keep them happy because it's basically a per diem job. And if you don't have them working for you, they don't have them working for me, I don't have a business. So that's not the place to say, that's not the place to cut corners. If you want to get a bulk order of supplies and save 10%, fine. But you need to invest in the people that run your business.
Yeah, and I think that everything that I'm reading is kind of hinting at I don't know if it's a labor shortage, but a very competitive landscape on hiring people. Like, I start to see all these companies now offering sign-on bonuses, and it seems to be very difficult to get people now. And with the inflation and stimulus and all this stuff going on, people expect to make more money because everything costs more. So you do want to take care of your people. So I don't know how much you know, Mike, about like the podcast workflow, but I'm just curious. Follow my curiosity here. I would love to be in a position where all I do is this. I click the button, I record, I have interesting conversations, and then I'm done. I don't need to edit it. I don't need to schedule these. I don't need to create the social media posts. I don't need to post the podcast. How would you advise me, like, to go through that? Like you said, first thing you did was get the designer. And I'm sure that then you had a second step and a third step, and you're going through a process. How would you advise me to think through creating this process for me so this is all I do?
Yeah, and the big podcasters, I would imagine that's what they're doing, right? They're not scheduling the guests. They're not finding the talent. They're just basically getting scheduled, and they're just doing the interviews. I think it would just come down to just doing one thing at a time. Do you have an editor?
I did use an editor, and it's very easy to find them.
I did speak to someone else who does podcasts in my area. I said, hey, how's your podcast going? She said, oh, it's great now that I have an editor. So I would imagine that's like one of the big things. You say that's easy to find. So that's one of those things that's an easy one to check off. And from there, I would say, what's next? What is taking up, if we talk. Yeah.
Let's go through this. Let's play this out because I know what your comebacks will be, but I want to go through because I know the thoughts that come up, and I'm sure other people are thinking similar things. Like there's these limiting beliefs that hold you back. So I want to just say them out loud and hear your response to them.
Sure.
Okay? I think it'll be helpful to people. So for example, you talked about the editing. I did have an editor, and this comes up, and I'm sure you heard this and you thought this. People can't do it as well as I can because they don't know how I want it to sound, what I want to cut out, what I want to emphasize. Like they don't know those things. They don't know what I know. Right? Editing, anybody can do editing, but this is editing my show and taking out things that I don't want to be out there, stuff like that. How do you address that concern?
I've certainly struggled with that, more so in the photo booth business than the real estate business, because the photo booth business was my baby that I did everything with. I started the real estate with leveraging other people's skills. So how can you get out of that mindset of I'm the best at it? I think you just, when you find the right people, that are just aligned with what you're looking for. Maybe it's a little bit of trial and error, but when you find that rock star that can help you succeed, they'll be there to take care of what you need to do. I mean,
So I had someone that I put in that category. It was amazing. I was done. Editing was great. I was happy I didn't have to do anything. But then this is the other limiting belief that comes into play that I think people deal with. So the podcast doesn't make money. Right? How am I going to pay this person, whatever it is, 30, 40, 50 bucks an episode? How do I justify that when the entity isn't generating that? Like, do you take the risk and just pay it out of pocket and hope that it grows and you make money later? Or do you wait or generate revenue somehow first and then hire people? Like that, to me, comes up with everybody that I talk to. Oh, I don't want to hire someone yet because I don't know if I can afford to pay them yet. Yeah. So how do you think about that?
So a business that's not making money is a hobby, right? So
that's true. Some things that start out as hobbies turn into businesses.
So I think that decision point, because you're right. If you are going to do it right and hire a team to do the social media and to schedule the talent and to do the editing, you are running a business. If you're just starting something up and like, hey, let's see what happens, you do have to do everything at first because you don't have the capital to invest in them, nor do you really intend to be investing that capital because you're just doing it as a hobby.
So let me rephrase that from let's say a photo booth perspective instead of a podcast, because you're right, the podcast can be viewed as a hobby. But let's say a photo boother, they're just a stupid example. They're profiting, $100 an event, and they want to outsource the design, the admin work, and whatever, and it would cost them $100 per event to outsource all that work. So the money that they're not making anymore, or maybe they're going to lose $50 by hiring and outsourcing all this stuff. Would you still tell them to hire someone to do all the work because it'll allow you to grow and make that up, or would you never spend money that you don't have yet to grow the team?
That kind of reminds me of like the Amazon example, because they were cutting super thin profit margins and showing losses for years just at the expense of growing, and it worked out for them. Just one thing that comes to mind. I would tell them that if they are looking to expand, maybe they're not able to get the price that they need to get for that photo booth rental because they are there doing everything themselves. So you're basically stuck making that $100 per event. If you're doing everything yourself, you're going to have to find another way to grow. You're eventually going to have to add value to be able to charge more. And in time, hiring out that graphic design and employees and whatever it be, it's going to cover itself.
It seems more efficient to get, like you were talking about, people that are much better than you, because now with the way the world works, you can get people for not that much money, right? They're freelancing, they're online, they're just doing graphic design all day, every day. So it's very efficient and they can charge a lower rate. So it's more economical now than ever to do stuff like that as opposed to trying to do it yourself. And it reminds me of, I think I shared this on the previous episode, I don't remember which one, but I remember going to this NYU real estate program, and they brought in this big speaker, and there were students from all around the world, and he was like a real estate tax accounting expert, and everyone's feverish taking notes. There's like students from Saudi Arabia and all over the world, and they're all taking notes on these tax accounting, hints and tricks or whatever he was teaching. And I remember just looking up and looking around. I'm like, wow, like I'm never gonna be the tax accounting guy. Like this is really not my thing. Like I can't compete with these people. That was a thought that came into my mind. And a couple minutes later, towards the end of the session, this professor basically said, "Hey, hope you guys enjoyed it and found it valuable. And if you're ever working on any deals and you need someone's help, please contact me. I do that. I do consulting on the side." And then this light bulb went off in my head, where I don't need to compete with everybody. I don't need to try to be the best at everything. I can just hire the professor, the world-class expert that teaches this, and it still works out because everyone wins in the deal, like you were kind of talking about in the beginning. He makes his money, I make money as well. So I guess what I'm trying to get at is you don't need to be the best. Oftentimes it's better to hire the best. Like you can hire anybody if you're willing, if you can pay them enough.
It brings to mind one of my favorite Robert Kiyosaki quotes. In his book Rich Dad Poor Dad, he poses the question, can you make a better cheeseburger than McDonald's? And the common answer that people say, oh yeah, of course I can make a better cheeseburger than McDonald's. Then why do they have more money than you? And his point is obviously it comes down to just knowing how to run a business rather than always being the best, right?
And you probably know this, but just for the benefit of people listening, have you heard of the book or E-Myth Revisited, or have you read the book?
I have not read it. I have heard a lot about it.
So you probably are familiar with this, where it's one of the best-selling business books of all time, but the main thing that you take out of that book is that people start businesses because they're really good at something. They're really good at making burgers. They're good at baking cakes. They're good at, I don't know, whatever you can think of, construction. And everyone's like, hey, you should start a company. And that's what they do. They open up a bakery because they're amazing at baking cakes. But a lot of them fail. And that's why you hear the statistics about small businesses, how 90% fail after 5 years. The reason they fail is because you're good at a skill that is really a skill that you can hire. Like it's easy to find bakers. It's easy to find all these things, graphic designers. What's the hard part is the skill of business. It's the marketing. It's the managing of people. It's the hiring of people, the training, the promotion, the advertising, all the other things that come along with it, the accounting, the investment, like all that other stuff that ties all those pieces together is what really you need to know to succeed and have a profitable business. But people start these things because they're like, hey, I'm good at cooking. Let me open up a restaurant. I like liquor. Let me open up a bar. And they fail because they don't understand that you need to understand business. And I know you know this because you read a lot of the similar books that I do, but if you have any comments to riff on that, I'd love to hear.
Yeah, I think exactly what you're describing is, people that are just working in their business and not working on their business. There's a big difference from starting your own restaurant because you like to cook or starting your own bakery because you like to bake cakes. If all you know is going in at 6 in the morning to the bakery or 4 in the morning, whatever those people go in, and baking everything for the day, you're never going to get out of that because you're not really in the mindset of running a business. You're kind of buying a job, just kind of like I mentioned earlier. A good investor knows how to identify other people's skills and leverage them to build the business that they want. And that's maybe why I struggled answering your question earlier about the photo booth business, because I was that guy that was really good at it. Like, no one knows these computers better than me. No one knows this software better than me. That's still what I struggle with to this day. I don't know if I'll ever get out of it in that business, but in other businesses I've learned enough skills where I can move on, like into real estate, and understand that I'm not even going to learn this. I don't know how to renovate a house, and people ask that stuff. Well, oh, you do all the work yourself, or what happens if the tenant doesn't pay? I'm like, I don't know. Let me ask my property manager. Or what happens if this happens? I don't know. Let me go ask my property manager. They are the professionals. They do it day in and day out, and I've delegated them to work for me and also add value to me. I've gotten comments from other investors, well, I don't want to hire a property manager because it costs me too much. Like, what do you mean it costs you too much? Like, have you considered the amount of value it brings you? Let's not even mention the time that it saves me. Just their knowledge of the area can save you thousands alone. From whether it be like avoiding a fine from the township or, holding a security deposit because there was something wrong with they realized that there was something wrong with the plumbing when the tenant moved out. You never would have caught that.
This is reminding me, like, you're so right, because for example, I have this real estate attorney that I've worked with over the years, and she's a bulldog, and she's saved me so many times, like, that I don't pay her enough. She does not make enough money. There's a property literally right next door that came on the market and I wanted to buy, and I was like biased because it's right next door. I just want it. I know the area. I know it. I know it. And she looked at it and she's like, you can't buy this property. Like, she literally fought me and said, I will not let you buy this property because of X, Y, and Z reason that I don't even remember, some legal reason with the naming on the title. Like, there was something I forgot and I don't even know what it is. But it ended up being 100% the right decision. If I bought that property's still for sale years later. No one's buying it. Someone bought it to flip it. They can't get rid of it. The property taxes are too high. No one's willing to buy it because of this issue that my attorney found. And there was other examples like this too, where I wanted to buy something down the block. And same thing. She looked into it. She's like, I will not let you buy this property. There's something fishy going on here. So these experts cost you money, right? But like you said, you have to look at the value they bring you, and also the things that they avoid for you, the mistakes they avoid for you, the issues they avoid you dealing with. There's an opportunity cost here as well. So I definitely spot on agree with that.
Yeah, you definitely have to, 100% right now, I would not have 13 doors without a team in place. How could I do all that myself? I would be so caught up with this tenant didn't pay their rent. How am I going to collect that rent? This tenant keeps calling me for the same maintenance request, and I don't deal with any of that. And how could I ever, maybe I'd have 2 units now, right? If I decided to do everything myself, I don't even know if I might have just given up.
You'd have 2 units, and you'd be working a lot more and only having 2 units. Now you have 13 and you barely do anything. And so what's better? Right.
And even on top of just the standard value your team gives you, this 5-unit deal that I'm closing on was just brought to me because of my connections in that network of people.
Have you heard of the guy Naval Ravikant?
I have not.
I'm going to include a link in the show notes to this famous Twitter thread that he wrote about how to get rich, how to get wealthy. And he's this Silicon Valley billionaire, but he's like a philosopher now, and people listen to him because he's really smart. And there's one thing that he really harped on, which is kind of what we're talking about, valuing your time. And he talked about his experience where he went extreme with it. Like, he's like, I'm a billionaire now, right? I can say it now. But even when he was a kid, didn't have money, he's like, I still valued my time at like $500 or $1,000 an hour. I forgot what it was, because and he's advising other people to do the same thing. And he took it to the extreme of, like, he would not mow the lawn, or if he bought something that he didn't like, he wouldn't even return it. He would just throw it out, because the time that it would take to return it or package it, send it back to Amazon, go back to the store to get back whatever $30 it wasn't worth it to him. And he says that allowed him to focus solely on value, like tasks that create value, or learning, educating. And to me, I'm like, all right, I listened to that thing, and there's like a podcast snippet of that too that I'll share with people over and over again, because I feel like I have to drill that into my head. It's hard to do it though when you're not a billionaire, right? You'd rather save that money or save the money and do the things yourself because you could. And the other thing that I struggle with is, like, you and I are both educated, we're well-read, we follow the same people. That stuff doesn't feel like you're doing something, right? I love reading, I love talking to people, I get a lot of ideas out of it, I learn more, but it doesn't feel productive. Back to that thing that you talked about earlier, where if you're designing graphics all day Is it high value? No. But you feel like you're getting stuff done. And I struggle with, there's kids running around the house, my wife's doing all this stuff. If I'm just sitting there reading a book, or if I'm sitting there having a conversation with somebody, it doesn't feel as much of getting something done, even though you really are leaping forward a lot with the knowledge that you're accruing or the people that you're connecting with. So I'll link to that in the show notes. I'm curious to hear what you think about that mindset, the philosophy of going to that extreme.
Yeah, it's such a great point that you make. It's hard, and it's hard to teach that to people. I think you just need to learn that as you go. They talk about, you'll hear lead measures versus lag measures, right? In real estate, it's just how you basically measure progress. Lead measures if you analyze 50 properties a week, you're going to close at least one of them. So like you're saying, focusing on those things that aren't making you money right at the time, focusing on your lead measures that are pushing you forward rather than things that just have to get done that aren't really pushing you anywhere. Like collecting your rent, right? Or just responding to maintenance requests. If you're responding to maintenance requests, you're not going to be able to put in your 50 leads a week, which may result in a property or may not. But if you do 50 a week every week, you're going to grow and you're going to get a property. So even though you're not getting paid to do that, the reward is going to come later, and you have to be able to realize that.
And now, a quick message from our sponsors. What I'd like to share with you guys today is something that I've personally been using and testing for over 6 months now, and that's the Fold debit card. It's pretty much like your usual debit card in the fact that you can buy things with it, but instead of earning cash back, you get to earn Bitcoin back. And as I'm sure you know by now, I would much rather earn Bitcoin back because I expect that to appreciate in value versus earning cash back, which I expect to depreciate in value with all the inflation. So the way it works is that you use it like you normally would, and every time you swipe and buy something, you get a notification on your phone that prompts you to spin a wheel, and based on the spin, that tells you how much reward you get for that purchase. So there's a no annual fee option and one with an annual fee. I personally pay for the one with the annual fee because I get more for it. A couple of reasons I really like this card is that I can earn 5% back on Amazon gift cards in addition to a bunch of other gift cards. And on top of that, I get to spin the wheel. So for example, last night I bought a $250 Amazon gift card. I got 5% Bitcoin back. I spun the wheel and I got another 5% Bitcoin back for a total of 10% Bitcoin back on that purchase. So what I do is at the end of every month, I see what I've earned and I transfer all that Bitcoin over to my Celsius app, which I've mentioned on the show, and I earn 6% on that Bitcoin that I earned for free. It's a beautiful thing. One other quick hack that I've got to mention that I don't think a lot of people know about is you can actually pay some credit cards off with a debit card. So, for example, I put all my personal expenses now on my Citibank double cash back card. I get 2% cash back, and on top of that, at the end of the month, I pay that credit card off with my Fold debit card and earn Bitcoin back as well. So I'm double dipping. It's really a beautiful thing. And I think for anyone listening who has the ability to pay for like large expenses with their debit card, stuff like rent, like education tuition bills, healthcare, taxes, like really big line items, if you pay for that stuff or have the ability to with a debit card, it's a total no-brainer for me to get this card and probably get the Spin Plus with the annual fee so you earn even more percent back. Right now, they're offering a special promotion. If you sign up by the end of July with my link, you get to get $25 free, and they give you 5,000 Satoshis to get you started. So that special promo is only valid until the end of July 2021. I think normally they just give you 5,000 Satoshis, so now they're giving you $25 on top of that. So I highly suggest check it out, and if you do, feel free to send me a message and let me know how you like it. All right, let's get back to the show.
All right, so if we go back to the property aspect of all this, I know there's tax benefits to owning real estate. Would you mind? You know what? Actually, this is what I wanted to get into next. I remembered. Sorry. Before we get back into that, I remember you posted something, or you shared something a while ago, and I didn't go into it in depth, so I don't want to butcher it here. But I'd love to have you elaborate just a little bit about it to show people the power of this method you're talking about. You shared this story of, I forget if it was a couple or an individual that was pretty much homeless, like living on someone's couch or something like that, and then they used this to grow a huge real estate portfolio in a very short period of time. So would you mind just like touching on that briefly to give people an idea of the power of this, even if you're starting from nothing?
And I posted that just to show that you don't need anything to get started in real estate. You just need a little bit of knowledge and a little bit of hustle, right? You can have money and buy real estate, but if you don't have money, get some knowledge and hustle and you can get it done. And yeah, you're going to put in the work now, but it's going to pay dividends later. So I just happened to listen to a podcast episode, and it was from Bigger Pockets, and they always have hosts. They always have guests from very high profile people to people who are just starting out within the last couple of years, and just have a really inspiring story. They've had celebrities on the show, and then they've just had the small time people like us that are just trying to make it. So there's one particular couple just happened to strike me, and they were living in New York, and for whatever reason they decided, they grew up, they say right in the episode, we grew up in that rat race, our parents, or whoever was on state assistance, we had low paying jobs in the city, so we were kind of taught that growing up, and then they got the real estate bug, and they said, we don't have to work these low paying jobs anymore, we don't have to work just to pay our rent and then just repeat that every week. So they basically picked up everything they had. I think they rented a car, or they went down south somewhere, I think in Tennessee, and saw if they could make it work. And there was just a few parts in their story that was just really interesting, where they were talking to people, what they call wholesaling houses. It's basically when you find a house that needs to be sold that's kind of distressed, and then you flip it. You kind of flip the contract to an investor, so you're kind of making a spread there. You can make anywhere from $5,000 to 50 or 100 grand. Common's like 5 to 20 grand on a single family deal. So they had that hustle. They went down there and they said, they had a rental car, and the guy selling the house said, "Yeah, I can tell you guys have money. I can tell you guys know what you're doing." And I thought that was funny, because they're like, literally, we showed up here in a rental car with a completely different state license plate, and we have no idea what we're doing. So they were faking it until until they made it. And turns out they just basically said, we're taking whatever we have, whatever fits in this rental car, we're moving down there and we're doing it. So that was just a little story I wanted to share, because these people had nothing 2 years ago, and now they are basically just doing it in real estate professionals.
Yeah, I'm gonna share that as well, because I think this is back to what we were saying about real estate. It's like everyone sees it as an attainable path to getting ahead, getting wealthy. It's not some incomprehensible thing like crypto or whatever you want to throw in there. Everyone feels like they can do it, and it feels less risky. I don't know if it really is less risky, but for whatever reason, it feels that way, because everyone's like, hey, I can touch the property, I can see the property, I see all these TV shows, my aunt flipped the property, my brother owns a rental. It just feels less risky, but I don't know if there is no risk, because I think the key thing here is that you have to find the right property. So all these things that we talked about, it's amazing, right? The returns, amazing. The lifestyle, amazing. You have a team, wonderful. But I just know, because everyone has the same thing. The hard part is finding these opportunities, these properties, right? And there's all these things that people say you can't find them on MLS anymore. You have to find what was it, unlisted properties, I think you said earlier. So I'd love for you to talk a little bit about, hey, someone hears this, you spark the fire, they want to become financially free. How do they find these properties? Because it's not that easy.
You have to go and do what other people aren't willing to do. In the beginning, especially, you're not going to do a 5-minute internet search and then find the deals that we're talking about right now. That deal that I did that little in-depth example of, I was able to identify that deal because I became an expert on that particular market. when you're just starting out, you're not going to know a good deal if it hits you on the head. So I think it really comes down to doing those kind of lead measures that we spoke about that aren't paying you anything. Get out there and go meet some realtors who are, that know investors. Go out there and meet property managers. Go meet other investors. Network online. I mean, it's so easy today with the internet. And then there's communities of investors out there.
So I've tried that in my area, and again, feel free to knock me down if I'm wrong here, but it seemed difficult to, it was a hard way to find properties, because if these agents or other investors found a great opportunity, the last thing they wanted to do is give it to somebody else. And even getting on wholesalers lists, I went on a mission once to find wholesalers, and I'm sure people see these signs around their community where there's hey, we buy houses for cash, call this number. I will call those numbers and be like, listen, if you're a wholesaler and trying to flip that property, let me know. And what I ran into is that oftentimes these real estate agents, these wholesalers, whatever, they already have a list of people that they work with, that they have a long history with, and the people that already do these deals, they want to do more because they're making money off of it. It's really hard to break into that network of people. So I didn't have success with that aspect. I'll show you how I did as well later. But for me, I found it very hard to break into those existing networks or communities. So have you had that experience, or am I off base here?
You're absolutely right. But it's like anything else. It's hard to get momentum. It's hard to get the wheels turning. So your first real estate deal is not going to be this unicorn home run deal, right? And I think a lot of people are looking for that because you don't have the connections yet. You don't have the team. I'm not as connected as some people in my circles. So by the time the deal gets to me, 3 other people turned it down. But hey, that's the deal I'm getting. It works for me. I'm going to make it happen. You can't have that expectation that you're going to get this, this unicorn of a deal that maybe you hear about on TV, or some investor told you about some crazy deal they got, so you think you have to get a deal like that. There's really, you got to find the deals, but there's no a deal's a deal. There's not these magical secret deals out there. Find a house, find a property where the numbers make sense, do your education, buy that property and get the experience. There's not these magical properties out there that are just hidden in this little tight-knit group. They're out there, but those people are also out there finding the leads. They've put the work in as well to get those deals.
Yeah, it's people often ask me as well for my opinion, hey, is it a good time to buy? It looks like everything's too overpriced. Is it a good time to buy? Is there going to be a crash soon? And the answer is always, do the numbers work? Or is the property making money? Did you calculate the numbers? If the numbers worked, then it doesn't really matter if we're in a hot market or a cold market. The numbers work and get the property. But I also love that you touched on that first deal is not going to be a unicorn deal. So for example, with my situation, I had a friend of mine who was a contractor, and we decided to flip properties together. So the first deal that we did, it was not a great deal at all. We just barely broke out with some profit on that deal. We got a foreclosed property on an auction site, and it was really not in good condition, required a lot of work. It was just problem after problem. But luckily, we made something out of the deal, and more importantly, it was what you learned. It was the experience. It was the connections that you made. It was the team that you built. Now you have the attorney, you have the agent, you have whatever. And what we found is that the next deal that we got was almost a unicorn deal, and it worked out extremely well, and it was handed to us. Basically, it was an off-market property that someone died, their kids inherited the property in an estate, and they just wanted to do a quick closing. And someone knew someone that we knew and that we were flipping properties, and then it just kind of got handed to us, and it ended up being a great dream deal. But that first one wasn't. And I think it's like a lot of things in life where you have to go through those first, you got to put that work in, right? You got to earn it. And once you do, things become easier. But no one really wants to go through that process. So I don't know if it's avoidable, though. I think you have to.
Yeah, it's definitely about getting your foot in the door. Your first deal is not going to be your best. You kind of have to pay for that education. If you want to progress and succeed, and and if you're the type of guy that only wants to buy one property every 5 years, you're not going to find those sweet deals. You're going to go on the MLS and take what's there, and you're going to get an average deal. And there's nothing wrong with that either, because that might be a person's goal. I know people who buy real estate and they're just trying to diversify for their retirement, because in the long run, real estate always wins. It's such a forgiving asset. When we talk about cash flow, we're not even touching on mortgage pay down. We're not even touching on property appreciation either.
So let's talk about that stuff. Why is it such a forgiving asset? So this is kind of what I wanted to talk about with inflation, but I'm curious to hear your opinion on why it's such a forgiving asset. It's kind of hard to mess up in the long run. Like, even if you get a bad deal right now, in the long run, it's very hard to mess up with real estate.
It definitely is hard to mess up in the long run. I haven't really been doing it long enough to give firsthand knowledge on that, but I will say that historically, aside from 2008, real estate has not corrected with the stock market. I know it has been more of a steady increase rather than something that goes up and down with market cycles. So even when there are market corrections, real estate does tend to hold strong over time and to always go up in value.
I think a reason for that, though, is that the real estate isn't listed on the stock market. Like, your property isn't constantly being traded, so it's not as liquid, right? So there's not the opportunity for, like in March 2020, the market crashed, but a couple months later it was already higher than what it was previously. So you get like real-time price action with stocks and crypto, and that's why you see these big ups and downs throughout time. Real estate is a different asset class where it's not as liquid, so you don't see those quick adjustments to value, and people don't really sell their properties that often. So I think one of the benefits of real estate is that because of that, you don't get freaked out. Like, oh my God, my Bitcoin went down 50%. Should I sell it? Panic sell. You don't panic sell real estate because you don't get those price alerts every day, right? Maybe once in 10 years you want to sell your home and you check the value. So it's kind of a different beast in that respect. But I'll tell you what I really love about real estate, and I don't know as much as you do about the tax benefits. I'm just talking about high level here. So I'd love to hear your comments on my thoughts here. People know that listen to the show, the inflation that I am assuming is coming, and I think when I thought about that, there's only a few things that I wanted to put my money in an inflationary period. Precious metals like gold and silver, crypto like Bitcoin, and some stocks, equities, and real estate. That's really the only thing that you can put your money in to protect against inflation or devaluing currency. Real estate, well, the perks of real estate to me, it's first of all, it's harder to find, so that's a con. It's harder to get a deal. There's the closing process and all the other stuff that goes along with it. But I love the protection that real estate gives you against inflation, because you're essentially buying a property now at the current price, and you're locking in a contract. So you bought that house for $100,000. The low interest rate is 3%, right? So you're locking in 30 years of payments at the current price, at the current interest rate, right? And maybe people that have parents or they've owned a home for a long time can relate to this. When you first buy that property and you see that mortgage of $1,000, that's a lot. But after 5, 10 years, 15 years, that mortgage payment is really like nothing. It's a lot easier to pay it. So to me, that is a great protection against real estate, because you're locking it in and you're actually benefiting from the currency devaluation, because it makes it easier for you to pay that debt. On top of that, because of inflation over time, the rents go up, wages go up, the property appreciates. All along the while, your payment is fixed. So to me is the huge win. And I know there's like depreciation tax benefits and other stuff, but that alone, as a concept at a high level, makes it a no-brainer to me to do it if you could.
Yeah, you're making all the same points that I would have just made. When you're talking, say, if you're trying to get away from the centralized dollar, like you're talking with inflation, your options are limited. You could go in Bitcoin. The difference in real estate, and real estate is a hard asset, so you are going, you are kind of going again. You're still within that centralized, system because you're paying U.S. dollars for the real estate, but the real estate's its own asset. So even if our currency changes in 100 years, the real estate's going to be worth whatever the going currency is, right? So the difference with real estate is that's not so much the same with stocks, is you are expected to acquire debt to obtain the real estate. So you have two things working for you. You have the inflation, whereas as dollars are printed, the dollar and the value of the real estate itself is going up. That $100,000 house in 30 years might be worth $200,000. But you also borrowed that $75,000 to buy that house, and in 30 years, you're paying it back with much less valuable dollars than you borrowed it at. And that's what you were getting at before. I just basically said the same thing in a different way, I think. But
in a better way.
And going back to 5 years ago, I was like, debt is bad, debt is bad. Dave Ramsey, no debt is good debt. And there is tons of bad debt out there. But when you learn, car payment, usually bad for most people, not everyone, but usually. Credit card debt, usually bad. Even I'm not a fan of student loan debt. Not good debt to have, in my opinion. People might disagree with me. But when you're talking about using debt as a tool to leverage an appreciating asset, it's very powerful, especially if you can borrow money for 30 years at under 3%. You should be borrowing as much money as you can. Don't go buy a boat. Invest it in something that goes up in value, and you cannot lose.
Yeah, that's the low interest rate. I mean, I was talking to someone on a deal, and they're like, "Hey, would you pay for this in cash or would you finance it?" I'm like, if I have the option, why would I pay for it in cash? With these low interest rates, like it's not difficult to make 3% on an investment. And I don't know if you have this experience, Mike, where a lot of my friends that own companies got offered all this SBA loan. I forgot what it's called, the EIDL or something like that, or I forgot the term, but it was like 30-year loans where you don't make any payments for the first 2 years, and it's like a 3% rate on the loan. I'm like, I'll take every dollar that you can give me at those terms, please. And they're giving out like ridiculous numbers. Like, I have a friend who, for all intents and purposes, shut his business down. It's shut down. Like, closed the bank account. It's just a legal entity wasn't closed, and he just got offered $400,000 in the second batch. And I'm like, this is so, to me, good for you, man. You're my friend. I hope you take that money you invested. I told him to put it in Celsius and make 10%. And just like make the difference. It's like 80 grand of free money. But it makes me concerned again from the inflation aspect, because they're literally handing out tons of money to like zombie companies, and that feels wonderful to people that can get it. But if you look at the big picture, it really harms the middle class and the lower class, because they're the ones that are paying this invisible inflation tax. Like now, I don't know if you're doing work on any recent properties, but if you go to Home Depot and you're buying lumber, it's literally triple the price it was last year, if you can find it. Like, everything is way more expensive. If you want to build a pool in Florida, because I was looking at buying property in Florida and putting a pool in, it's like an 8-month wait list, and it costs a lot more money. So this stuff is affecting the regular people, right? Because they can't get it, they can't pay for it, it's more expensive. So again, I kind of riff on this all the time. You got to protect yourself in whatever way you feel comfortable. If you don't feel comfortable about crypto, you can do stocks. If you don't feel comfortable about stocks, you can do real estate, but do something. So it's something I'm passionate about getting across in every episode. I know, Mike, you agree with me, but any comments you have on that little rant there, I'd love to hear.
I will say, do anything except save dollars in your bank account that go down in value, because the dollar only goes down in value, and your bank account's not paying you anything for it. So I think real estate's very safe, especially long term. crypto's very volatile. I personally wouldn't put my life savings into it. But I mean, even in stocks are okay. At least as inflation goes, as inflation runs, the stock market will at least keep pace maybe with inflation. Because as dollars enter the money supply, these stocks are going up because the cost of goods are going up, so the values of the companies are going up, at least with inflation, hopefully a little more. But yeah, I'm aligned with your thoughts. I don't know the ins and the outs of the economics like you do, but I like how you call it the invisible tax. It's kind of like that, the whole wealth gap argument with inflation, which I don't really know enough about to get into, but
yeah, and I know we both follow Kiyosaki. He's getting really passionate about this too. So I think just my last 2 cents here for people that wonder, because I get a lot of questions about this, is that as long as the Fed is printing money and keeping rates low and saying that they want inflation, like as long as those things don't change, I agree with Mike, you do not want to hold cash. I just don't see how you will lose owning stocks, crypto, or whatever. They may be volatile, but I would argue that that's only happening in liquidity events where there's some shock to the system and there's a liquidity event. It may cause a crash, but it would be a short-term crash as long as those 3 variables don't change. Fed printing money, keeping rates low, wanting inflation. If you keep seeing those 3 things staying there, it's a free-for-all. And that's what you see now with all these, like there's these kids that are just trading on Robinhood and making it's monopoly money. They don't care. Like they don't care. They just got free money. Let me just throw it out there and see if I can flip it. And it's a fascinating time. I don't know if you're dabbling in a lot of this stuff, Mike, but to me it's fascinating to observe.
Yeah, it really is. I think it's crazy what's going on in the crypto world right now. But I like to think of the dollars as the currency just for exchanging items of value. I think once you stop thinking like the U.S. dollar as of like I have all this money, I'm rich. Like, no, you're not. You don't have any assets. What do you like? Do you have any cash flowing assets? What do you have that's of value? Yeah, the dollar right now, if you have $1 million in the bank, sure, it's $1 million in value, I guess, today, but what are you acquiring that's of value? So I just like to look, I look at currency, U.S. dollar, as just a means of obtaining things of value. And I think that's how you have to look at it.
Spoken like a true investor and reader of Rich Dad Poor Dad? Yeah. So I've heard about this. I think it's the 2% rule. Is that right, or is it 1% rule in buying real estate?
Yeah. Are you referring to the 1% rule where the monthly rent should be 1% of the purchase price?
Mm-hmm. Yes, and I'd love for you to explain that to people and address my feeling was that it was very hard to find anything even close to satisfying that. Maybe I'm looking in the wrong places, but if you can explain that to people,
do you still live in New York? That's why.
Yeah, I know.
So
I know
they say in Jersey it's like in South Jersey it's like the 2% rule, but that's very different. It's almost the opposite of North Jersey. The 1% rule is a guideline. It's not a hard, fast rule. So don't think just because you can't find a 1% property that you can't invest in that. The 1% rule, like you're saying, is if the house is at that $100,000, it should rent for $1,000 a month. I know the strategies up in northern New Jersey and New York are different as far as real estate investing. I don't know the game up there. I know it's more of an equity play, like more of a value add and like long term. They're not really cash flowing the numbers that we're cash flowing down here in South Jersey, but we're also not seeing the appreciation, some of the other benefits that they are. That 1% rule is, I've never been a huge fan of it. It's not a hard, fast rule. It's a guide, especially for like when you're starting out. But once you know a market, you don't really need a formula or a rule because from other experience of doing deals what a deal looks like.
So I guess that makes me feel better because I couldn't find anything. And again, I know I'm in a very competitive, like the numbers are just crazy in New York. Like you're basically banking on appreciation or like the long-term value adds that you're talking about. I'm curious to hear though, because my strategy, it was to flip properties to build a larger cash stack pile so that I can buy like larger multifamily properties with that cash pile. Now things have changed because of the inflation that we just talked about, and it's hard to find properties that makes good sense for flipping. But I was getting like 20 to 30% after everything, including tax, on the flips that we were able to find. So I'm curious to hear from you. Why did you not go the flip route? Because that's what everyone thinks about. HGTV, look at that, easy money. Why did you go more the rental route?
Yeah, two different animals. Like you mentioned, flipping is taxed as ordinary income. It's like a short-term capital gain type situation. But I think, flipping is kind of sexier. It's kind of flashier. Look at this gorgeous house I flipped. Rental real estate's not always the sexiest, flashiest thing. I don't have crystal chandeliers in my units or anything like that. I think, and it goes back to the mindset. Everyone's looking to make that quick buck. Everyone wants that quick dollar so they can go spend it on something, and they're going to have to chase another quick buck. They want to make a quick buck and then go buy a car. And that's their idea of success. You really need to switch that mindset up. I don't care how much money you made in a year, because you probably spent it all, and you're just as good as everyone else because you have nothing at the end of the year. I'd rather go the rental route because, that asset, even though, hey, I'm only making $100 a month rather than 10 grand on that flip, but in the long term, that asset's going to pay me for the rest of my life and appreciate in value.
What are the major tax benefits that you count on with real estate investing?
So your major tax benefit is your depreciation. To give you an example of that, so what depreciation is you can write off the value of that property over 27 and a half years in residential real estate. So, and that's even if you didn't use your own money to pay for that asset, right? So let's go back to our $100,000 example. So we bought a property for $50,000. We put $25,000 into it in capital improvements. So our tax basis for that property is $75,000. So we can depreciate that $75,000 over 30 years or 27 and a half years. And don't forget, we got that money back on the refinance, right? So we have $0 into that deal. And let me bust out my handy calculator real quick just so I can give you a number. So how much we make in a month? $300 a month, right? Because we talked about our operating expenses, which is our property management and our our maintenance and all that, right? So we're only making like $300 a month on this property. So our profit is $3,600 a year. So we would have to pay tax on that $3,600 a year, right? So now with our depreciation, we are depreciating $75,000, which is not our own money. That's someone else's money. We are writing that off over 27 and a half years. So we'll take our 75,000. So the government's going to write off $2,700 and $2,727 over 27 and a half years. So I just made $3,600 on that property, but I wrote off $2,700 to make it easy due to depreciation. So I'm only paying tax on $900.
$900.
Yeah.
That is so powerful, and I think people. I love. It was hard for me not to interrupt there, because, but I wanted you to go through and explain that, because I think most people don't understand depreciation. Why does it matter, et cetera, et cetera? And they see people like Donald Trump's tax returns and why it's so low. And this is something that wealthy people leverage, is that they have depreciation, and that allows you to make that money tax-free. So that really reduces your tax burden each year on the property, and you keep more of your money. It's a huge win. I would argue a lot of real estate investing or properties may not make sense without this benefit.
Yeah.
So that's a very key benefit in investing. If they ever took that benefit away, I would imagine property values would drastically decrease.
Yeah, the U.S. has some very good tax laws when it comes to real estate investing. Always has. I mean, I think that's part of what built this country. But every country in the world has some type of depreciation benefit as well. Yeah, it cracks me up when people think that everyone's cheating the system by not. I won't mention any names of past presidents or anything, but
I tried not to, but it was hard not to.
People think that they're tax cheats and they're calling them loopholes in the tax code, when a loophole is an unintended benefit of something, right? Depreciation is written into the tax code, and it should be taken. There's actually, I'm not an accountant, but I was advised by an accountant that if you don't take depreciation on a property and you sell that property, you need to reduce your tax basis as if you did take depreciation. So you're actually required to take depreciation on these properties. But people want to, make a story about how everyone who invests in real estate is cheating taxes, but it's actually required by the tax code.
It's again back to the mindset where whether it's society or your job or school or whatever, people oftentimes complain. Oh, it's a loophole, the system, the professor, whatever you want to say. And my philosophy is I have to work with the system as best as I can. So, for example, with my family friends that go to college, my advice to them is always like, listen, the first day they give you the syllabus, right? That's the first day of any college class, and the professor tells you exactly how they're going to calculate your grade. This is kind of like the tax cheats and whatnot, right? He says 20% is going to be attendance, 20% this, 20% 21. You have to understand that formula. And once you understand that formula and you realize that 60% of your grade is just for showing up, participating, and doing your homework, you feel less stressed, because even if you get like a 70 average on all your tests, as long as you hit those other points, you'll still get a good grade in the class, right? And people don't understand the importance of understanding the rules, understanding how the game is structured, how it's played, and playing within those rules and taking advantage. I don't want to say taking advantage, because you're operating according to the rules, but like people don't understand the rules and they just complain and they wonder why they don't get ahead. I mean, you can use the same benefits. Like you can get depreciation too, right? Just got to go through the process.
Yeah, I think it's important to understand the tax code. I am a big tax guy. Can I plug a book? Tax-Free
Please.
Wealth by Tom Wheelwright, and What Your Accountant Isn't Telling You by I forget the name, but we'll look it up and we'll put it in the notes. Both great books. What Your Accountant Isn't Telling You is, I would say, more for the average everyday folk and how they can pay less in taxes, and then Tax-Free Wealth really is eye-opening as far as the IRS code, and following these tax strategies is really just doing what the government wants you to do. They want housing. They want real estate investors to provide housing for people, because that stimulates the economy. That creates jobs. So by corporations and real estate investors getting tax breaks, they're stimulating the economy and putting money back into the economy and providing jobs for people. So you're just doing what the government wants you to do.
Yeah, this is a whole other conversation. I don't want to get people riled up and upset people, but I always found that ironic. People complain that corporations don't pay tax, right? And I understand why people think that, and I understand the mindset there, right? It doesn't seem fair. But if you really look at the way the system is structured, I'm just being unbiased, right? Would it be great if companies paid more taxes and I had to pay less? That'd be great. Wonderful. I'm not against it. I'm just looking at how the game is structured. And the way it is structured is that I don't think corporations are viewed as tax income to the society in America. Their purpose is to, what you said, employ people and stimulate the economy in other ways. Those other ways are what's taxed. The wages of their employees, the purchases of their employees, those the suppliers that they buy from, the cost of those things are taxed. But the corporation is not really viewed as a tax revenue source to begin with. That's not how the game is structured. Their role is to employ people so Uncle Sam can tax those people. That's just the way it is. I'm not saying it's right or wrong or I'm complaining about it. It's just the way literally it's
I
laid
couldn't
out.
agree with you more. And one of the things Tom Wheelwright says in his books is, taxes aren't fair, and they weren't designed to be fair, which is what you're kind of getting at as the middle class kind of getting the brunt of the taxes there. But yeah, that's just that's how the tax code's written.
Yeah. Okay, so I'd love to go back. I know we're going to try to wrap this up soon. I'd love to get back quickly to have you touch a little bit more on how do you find the properties? Because you kind of said that you have to do things people aren't willing to do, but what are the specific things that people can do after they hear this and like, all right, I want to start looking for seriously at properties? They hear you can't find anything on the MLS anymore. So what are some specific things? Like I've heard of driving for dollars, et cetera, et cetera. What can people do to find properties?
Yeah, and I think if you can find deals now, you can do anything in real estate. I've always said that, especially like this year, 2021, where we're at with the real estate market. If you can get your start now, especially in rental real estate with the whole eviction moratorium, like you have a lot of stuff working against you. Like if you could be successful now, you can probably be successful at any time. And I've heard that from other more experienced investors. My first couple deals were on the MLS. The deals aren't there right now. I mean, I'm not saying you can't find a deal. If you look, if you really dig, I'm sure you can. But aside from your conventional methods, you're driving for dollars. You can go around. I mean, I've never had success with that. That's very specific to a certain area. People do direct mail marketing, sending letters. I've done some of that. I haven't closed any deals off of it yet, but you could buy a list offline, send a letter out to them, negotiate a price, try to find distressed sellers that way. But my number one way is just networking. Talking to wholesalers. Wholesalers are the people that do that work for you. They do the driving for dollars for you. They do all the direct mail. So they're taking that investment to put that time in to go find those deals.
How do you find wholesalers?
There's plenty of them. They're not out there like the MLS is out there, advertising on Zillow. But you need to get hooked up with your local real estate group. Go on biggerpockets.com, look for any local meetup group that's local to you. Look on Facebook. There's Facebook wholesaling groups for specific areas. There's New Jersey wholesaling, there's New York City wholesaling. I'm sure there's just hundreds of them. Build a network. Those are just different ways to build a network.
But don't these wholesalers, I could be totally off here, but don't they just like find a property and then blast it off to an email list, and whoever pays the most is who gets it?
Yeah, and you have to find what your niche is going to be, right? Because when I first started out, I didn't know what I wanted. I found a market that the numbers worked, and I said, okay, I'm going to be the expert on this market. This deal that I'm closing tomorrow, I'm closing it because it's in the market that I buy in, and I put out there saying, this is where I buy deals, this is what I want. It was very specific to what I buy. The person that brought me this deal happened to know I was looking to grow my portfolio. They knew I had access to, experience in single-family deals in this area, so this happened to be a portfolio of single-family deals that just really meet my criteria. Those emails that come from those wholesalers, I really don't even open them anymore, because if it's not in the town that I'm looking in, I'm not interested in the deal, even if it is a deal. So yeah, it gets blasted out to a ton of people, but I think you still have to be able to identify a deal when you see it.
Yeah, I think that's what it all comes down to, is identifying the opportunities. Everything else, you can hire an attorney, you can hire a contractor, you can. Those are kind of easy problems. That's the main problem, is finding them. So hopefully people could take advantage of some of the tips that you mentioned in sourcing them and analyzing them. I think you walked through some specific examples, which made it really helpful for people to understand what I like to call is like phantom costs. It's not just what is the total rent and the mortgage, right? There's other things you have to factor in. And you watch HGTV and they don't show you those things. And it makes it look a lot easier, and it's not. You have to be really transparent about what you're getting into, and that's why maybe the first deal you should do nothing crazy, like get your feet wet, learn the process, see what it's really like before you start going big and going hard. One other thing that I'm curious to get your opinion on, people are always questioning, like, hey, don't buy now, it's crazy. There's a crash coming. Once this moratorium is over, the real estate's going to crash. So I've got my own views on this. I'm curious to hear what you think about the real estate market.
Yeah. I'll quote Scott McGilvery. I think I messed up his last name, HGTV guy. The best time to buy real estate was yesterday. The second best time is today, and the worst is tomorrow, or something along those lines. So basically, like you mentioned earlier, it's always the time to buy. I'm in the mindset of accumulating as many assets as possible, even if there are short-term fluctuations. The one thing I think of too is, have you ever met a wealthy person that said, "Oh yeah, I just waited for the market to crash, then I bought everything"? It's never happened. There's going to be market fluctuations, but in the long term, things are always going to go up. And especially with real estate, and we can speak to it because there was a major real estate crash less than 15 years ago. When the market crashed, if your strategy was to wait and buy, you weren't buying anything because no one was lending on anything. So I don't think anyone has ever gotten wealthy in real estate by waiting for the market to crash. So
yeah, it's a different beast than like buying Bitcoin
right.
when it crashes. It's just a different animal.
Like you mentioned, the liquidity. It's not, you don't just buy the dip in real estate. It just doesn't happen.
Yeah, actually, when we were starting to flip properties, we did a study in my area of the real estate crash years before to see how did it affect prices in our area. And what we found was that it was a very delayed reaction in the actual listing sales, and it wasn't that big. Like, it was negligible, at least in my area. I know some other areas got hit way harder, like Detroit and whatnot, but in New York, Long Island, whatever, it was really negligible. That if you waited for that, you just wasted a ton of time that you could have been accruing wealth by owning stuff. So I agree with you. Is there any other investments or ventures that you'd like to talk about? I don't know if you want to get into anything else that you do, that you own, that you focus on, because we talked about the business side, the job, and the real estate. Is there anything else?
My primary focus is real estate right now, and just building, financial freedom through that. I've just found it's a really great avenue, and I think I could build, a level of financial freedom faster through that than anything else. Especially when you consider how much, time and work gets put into it. I do the standard stock market investing, and I adopted Bitcoin as a viable investment vehicle earlier this year. Prior to that, I wasn't into the crypto at all. In 2017, I thought it was way too early. I wasn't ready to invest money into it, but now I'm long on Bitcoin. None of the other silly coins that are out there.
Preach.
But that's that's my portfolio. And other than that, I love talking to people about how they're making money. It's not like an ego thing. It's not talking about how much money you have. I'm just genuinely interested in hearing how you're finding ways to make money, and if you want to hear about how I'm choosing to do it, that's great too. Because maybe my ears are always open. Maybe I'll get an idea and just start the next venture. That's just how it goes.
That's part of the reason why I love doing the podcast, is that I find that I learn a lot. Everyone's different. I learn from reading. I do a lot of reading, but I also learn a lot from talking to people, because that's like live feedback. Hey, what are you doing? Hey, what's working over here? Hey, here's what I did. I think the conversations are really valuable for learning for me. So that's why I really like doing the podcast, and why I enjoy listening to podcasts. That's another thing I tell my friends is, growing up, I had to listen to Lil Wayne on the radio. I had to. There was no other option. But now you've got podcasts, man. You can listen to billionaires and all these entrepreneurs for free. They're telling you what they're doing, what they think, for free. Why would I be listening to Drake when I can listen to someone that's successful and I can get something out of?
Yeah.
I know you feel the same way, because I know you soak up knowledge too.
Yeah, there's so much free education out there now. And it wasn't always like that, especially in the real estate world. But there's just so much, people sharing their stories and podcasts and YouTube, and they call it YouTube University now, right? Because you can learn anything there.
Yeah.
So it's the information age, and you got to take advantage of it.
In the beginning of the conversation, these are the last couple of questions that I'd like to wrap up with. You talked about how growing up you had that different mindset. Did you feel different than everybody else growing up? Or like if I interviewed people that knew you as a kid, would they say, hey, Mike, I always knew, he'd be a multi-millionaire real estate entrepreneur one day? Or would they be surprised?
I don't know if the business side of me kind of shined out. When I was a kid, I was very introverted. I still am introverted as an adult. I was never like really a go with the flow. I kind of still, I did whatever made me happy. My hobbies were what I wanted to do. I wasn't, just doing something to go along with the crowds growing up. So I think that allowed me to think for myself and develop my own mindset, which is different from the school mindset of go to school, get good grades, get a good job, and hopefully you have $1 million in your 401k by the time you retire. And I don't even think people do that these days. So
I gotta just throw this in there before I forget. I want to see what your reaction is, if you'd be shocked, because I worked at a real estate firm, and I was curious one day, because I'm like, all right, these are all real estate professionals, right? This is what they do for a career. Where do they put their money? Do they own real estate? So I remember walking around the office one day and going into each and every person and asking them what people might view as inappropriate. And I'm like, well, you said, what do you do with your money? Right? You're a real estate professional. Do you own properties? Where do you put your money? And the overwhelming majority did not own real estate and put it in the stock market. So to me, that was really surprising, because everyone talks about real estate. They do it for a career, yet they don't put their money in there. I found that from the conversations, they just viewed the stock market as easier, more passive. They didn't want to deal with the headaches. But again, as we alluded to, you don't have to if you build a team. So does that surprise you that people didn't put their money there?
Because you even see that in the financial fields. People who are these financial brokers, they don't even really invest in the stock market. They're just employees. They know how to work for a paycheck, and then buy things that are expenses, and then work for their next paycheck, and then buy things that are expenses, rather than earn a paycheck and then buy something, an asset that goes up in value, and then take the money from that asset and buy things that go down in value. People kind of miss that step, and that's just the mindset that people are in, the employee mindset. Even the people that are in the financial services and real estate people, especially, they typically don't own real estate.
We talked about a lot of different things in this conversation. It was a long conversation, very valuable, but what I ask everybody is, like, what is a rich life to you? Because it's not about just money, even though we're interested in money, and like you said, you like to learn how people do it, so do I. What is a rich life to you?
Yeah, I mean, a rich life to me has nothing to do with money, right? I said earlier that the money is just your currency to exchange things of value or obtain things of value. A rich life just comes down to freedom. If you make $1 million a year and you spend $1 million a year, I don't really consider that a quality of life, because you're just always chasing that next paycheck. You might have nice things, but where does that really get you at the end of the day? Those material things will make you happy for a minute, but you have no freedom in your life. The joy in life comes from freedom, and then once you reach that level of freedom where you don't have to work, or you do work a little bit, but you work on your own terms, you're able to use that wealth that you've built up to do good for others and really live a rich and valuable life.
I totally agree with you, and I think I told you that I actually lost a family friend to cancer recently, and these thoughts were like part of my reflection, because the person was wealthy, beautiful home, like a mansion, all these things, like all these nice things that you just alluded to. But how much does it matter at the end of the day, right? So I think you hit it on the point with the freedom aspect and doing things that you actually enjoy. Because we have a limited time here, right? It's not just about chasing that next paycheck. It doesn't really do anything for you. So it's a great place to leave it. Is there anything that you want to point people to? Can they interact with you, social media, anything like that you want to point people to?
I'm not really like I don't produce a lot of content for social media. You can find me on Facebook, Mike Anderson with this face here. But
I'll link to
you
it.
can link to it. I have a blog, but I haven't really, if you find me on Facebook, I might post some blog links every once in a while. Sometimes I post little stories about what I have going on. If you are interested in real estate and you have a few questions and want to connect, I like answering questions. I like to help people out who are just starting out, just to kind of pay it forward.
Awesome, Mike. Thank you so much. Great place to leave it. A lot of great, valuable, actionable, and like practical stuff that we went through. So I truly appreciate it. Hopefully people will get a lot of value out of it. And thanks you so much for your time.
Appreciate it. Thanks a lot.
Thank you.
And there you have it. If you enjoyed this episode, please remember to leave a review. I may even give you a shout out and read yours out on the show. For any and all resources that we discussed, check out the show notes or head on over to boundtoberich.com. Until next time.